G'day everyone, it's Engelo Rumora here, your favourite Australian. Stop tickling me. And the Real Estate Dingo, bringing you another yellow ladder tip of the day. Now, today we're talking about this, how to spot if the property is in a shit area. Okay, I've actually been asked that question by a lot of beginner investors. How do you know if the property is shit and if it's in a shit area? Okay, so this is how you know. It's quite simple. When you get an address to a particular property that you're looking at buying from a turnkey provider, or if you're just looking at buying out of state or whatever, even if you're looking at buying in your own freaking state, the best way to go about it, especially here in the Midwest, is you have to look at the comparable sales, okay? So jump on Zillow, okay? Even though I hate Zillow, jump on Zillow and see what are the price differentialities in regards to a particular property in a particular area. So let's just say that a turnkey company wants to sell you a house for $65,000, promising you a rent of $900 per month. The best indication to see if this property is in a shit area is once you do your Zillow search or your Google search and you look at the comparable sales on maps around that property, you will most likely find a lot of properties that are selling for $2,000, $5,000, $7,000, $8,000, $10,000, okay? The more properties that you find selling for such a cheap price, it will most likely mean that you are in the ghetto. You are in a C or a D class area, okay? And it's shit. You do not want to touch it. Another little tip is go on spotcrime.com. It's called something like that, right? And punch in the address and then take a look at how many shootings and you know, all kinds of crap going on in that area is actually happening on a daily, weekly, and monthly basis. So spotcrime.com, I think that's what it is. Google it, you'll find it. So what you want to see, guys, to justify an area being a desirable area, for example, like here in Toledo with all of the Ohio Cashflow properties, is you want to see more of a consistency in those comparable sales. So you want to see more properties selling in that $50,000, $60,000, $70,000 price range. So whenever I offer you a property for sale and you punch in the address and then you look at what is selling within close proximity to the target property that I'm presenting to you, you will find more of a consistency of renovated homes similar to ours selling for $50,000, $60,000, $70,000. Once you see that consistency, that is normally an indication that homeowners are actually purchasing in that area, and that area tends to be quite desirable and it has a good exit strategy because people are willing to pay $50,000, $60,000, $70,000 and the banks are lending in those price ranges. In the ghetto, you will find a lot of shit comparables like in the $2,000 to $10,000 price range, and then you're going to find a lot of high comparables like in the $60,000 and $70,000. There is no middle. Now, all those properties that are selling for $60,000 and $70,000, they are unfortunate and unsuspecting out-of-state or out-of-country buyers that have been spooked into buying these shit properties in the ghetto. Okay, so that is how you spot a turd. All right, you get it? I hope you do. If you don't, give me a call. Send us an email. I'm more than happy to explain it in more depth. Check out the description in this video. You're going to find a ton of links. Once again, guys, I'm Engelo Rumora, your favorite Australian and the Real Estate Dingo. You guys have a great day.